please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, very good afternoon. You're watching MIDCAP Radar on CNBC TV18. I'm Ekta Batra and with me is Sumaira. Well, it's turning out to be a steady session for us, but we've really not built in terms of the gains that we saw initially. So 10,400 odd is where the Nifty is at, and we have the MIDCAP index, which is outperforming with a gain of around 1% and a good advanced decline ratio on our hands, which stands at around 3:1. So good going for the markets. Stable and steady is what you describe it as, along with follow-on buying from yesterday's close. Hi, Sumaira.
Hi, Ekta. Good afternoon. Let's also take a check on how the European market have opened up, because overnight we've seen a record close in Wall Street ahead of the vote on the tax bill by the Congress. Not a lot of follow-through in Asia this morning, so we saw a mixed close there. And the European markets also just opening flat to negative, actually. So let's see if things pick up pace. But globally, the key talking point will be how things shape up on the tax bill. It's time now to track the technicals of trade, and Mitesh Thakkar now joins in. Hi, Mitesh. Good afternoon once again. And quite an uneventful day, actually. So I'm going to spare you giving an index call. Let's just get straight to stocks then. What are you looking at?
It's been very quiet on the index. So coming to the stock side, I think one stock which is showing good traction and jump in volumes is Steel Authority. It is also on the verge of breaking above that 82.5, 83.10 kind of range, which the stock has not been able to cross for the last 3-4 weeks. So I think we're preempting a breakout here, suggesting a buy with a stop at 79, look for targets of 90. And Aurobindo Pharma is a buy as well. Keep a stop at 674, look for 710 as the target.
Okay, well, Mitesh, I just wanted your opinion on a lot of these sugar stocks, because they've spiked up on the back of fundamental news. But anything that you like, maybe in terms of taking a position at current levels?
To my understanding, I think most of these stocks have gone through correction, are bouncing back from medium-term supports. Not a big positional call, but a trading bet, yes, I think looks like interesting for a stock like Balrampur Chini. I think it's made a low at about 140, 141 and is reversing. So now it's a good buy with a stop below 144, and I think a trading bounce can see the stock price head towards 157, 158 on the upside.
All right, Mitesh, thanks very much for that. Let's shift focus then to some news flow we've been getting through the day. The 28% tax slab is hurting the tourism sector. That's the word coming in from the CMD of Hotel Leela, Vivek Nair. Shireen Ban caught up with him on the sidelines of the CII Services Conclave, and here's more from their conversation.
The first reactions from overseas tourism marts are that it has greatly affected tourism, almost a drop of about 20%, which is sizable.
A drop of 20%?
And this is the season when 80% of tourists come between November and March. And we find that the occupancy levels are falling short of our budgets. The average rates are also falling short. So we have taken it up with the Department of Revenue and the Ministry of Finance. They gave a break to independent restaurants last month. They brought it down to 5%. So we requested that these categories of hotels also should be brought to at least 18%. And as I mentioned in my speech, the manufacturing exports get a whole lot of benefits, and service exports are totally ignored. For example, the manufacturing exports sector gets VAT refund, either after payment of VAT or they're exempt from the beginning itself. We have said at least that could be done, and several other aspects of the SEI scheme and everything else. So once we are equated with manufacturing exports, that'll give a big fillip to our industry.
So you're saying that there is a 20% drop over last year as far as incoming traffic is concerned?
So foreign tourists are concerned, because you can't compare 28% with the neighboring countries who have 7% and 10%, Indonesia, Malaysia, etc. So the entire package does hurt them, and we are really worried about what will happen if nothing is done immediately. So we have met the finance minister. He sees on the matter. Our tourism minister also has taken it up seriously, because as you know, the hotel sector employs 53 million people in our country. And the target of the government is to increase that to 87 million, which can only be done if we increase our foreign tourist arrivals, which is a meager 7 million now, compared to other countries like Malaysia and Indonesia, or even Turkey, which gets 34 million. So we need to definitely, as the minister said today, increase the foreign tourist arrivals so that there's employment generated in a much larger measure.
We're at the end of a calendar year. Let me ask you about the plans for the Leela Group, both in terms of debt reduction as well as new capex. What can we expect?
We have a restructuring package in place, and we hope before 31st March we'll have that ready. And our accent now is on asset-light strategy, like what most foreign firms do. They own assets developed by other developers. So that's a philosophy which we can take it forward as we have our brand name very strong in the market.
Any more divestitures that we can expect?
No, just the Chennai one which we had committed to. That's all, none more. We can be able to retain all the other assets.
A stock on our radar now is a stock that's buzzing about 17% higher in trade. That's Indorama Synthetics. It's risen 68% in the last 3 months. O.P. Lohia, the CMD of the company, now joins in. Mr. Lohia, good afternoon, sir. Thanks much for speaking with us. First up, I want to just find out if there are any latest developments. You had a board meet, I believe, on the 25th of November, following which there was a resignation of the CFO. Anything else that we might be missing? Anything significant in the board meet?
No, nothing significant. Recently, it's mainly, I think the textile industry has started looking better, and the demand looking better as China's competition, which was there, is gradually reducing. So and if effect of demonetization and GST is now behind. So now the things are getting better, and we hope that yes, for textile demand also will pick up from here.
So, Mr. Lohia, can you just describe to us how has business improved and vis-a-vis how is it settling down post demonetization and GST, see as compared to July?
No, gradually what's happening that under GST, all the unorganized sector competition and some of the taxes which some producers were not a level playing field is now level playing field, like what we manufacture, like textured yarn. The people who are buying POI from us and converting it to textured yarn, they're exempted from excise duty. Similarly, recycled fiber was exempted from excise duty. So this sort of things which is bringing level playing field under GST should hopefully gradually improve the business cycle for the whole industry.
Right. But, sir, you know, your operational performance has been quite volatile, actually. I mean, I understand, you know, things looking up post GST, but say the last 5 years, what is this on account of? Is it because of the way polymer prices have been moving, and now that GST has come in, can we expect some bit of stability on your operational performance as well as your bottom line?
You're right. I think we hope that, yes, now the stability should come, because one of the other things which was impacting us last 3-4 years was the recycled fiber competition, which was in India also, as well in China. A lot of recycled fiber plants were put up. But now recently, as China have restricted the import of waste, like polymer waste, so there also the recycled fiber competition, which was impacting the industry, is now not there. So the fiber prices, which were very low, has started also improving.
Okay. Mr. Lohia, you have mentioned that demand is improving for the company. So would that mean that we're probably going to see some growth in the second half of the fiscal when it comes to revenue?
Yes, definitely we see that in 2018, current year, definitely demand will also come up, and the demand and as well as our production also, which is a little bit low in the last 2017, will get better because of this level playing field brought to the industry.
And sir, given the way crude prices have moved, say, in the last 5-6 months, could you give us a sense of what has been the trend in polymer prices and what is the outlook?
Actually, polymer prices has moved in tandem with the oil prices gone up. So similarly, we have seen our raw material prices also have gone up around 30% in the last 6-8 months. So, but as the demand is there, that's why we have been able to pass on this increase in raw material prices to the customers. So that has impacted some demand in the last few months. but gradually I think it will stabilize.
You had some money which was raised via debentures as well recently?
Yes, we have raised around 20 crores through convertible debentures.
What is it going to be used for?
No, it is for the cash flow of the company. I think company needed some money. So this was just to augment the working capital requirement of the company.
And what is your incremental fundraising program? Do you have any?
No, actually, this has taken our promoters' equity to around 74% after conversion.
All right, Mr. Lohia, we'll leave it at that, sir. Thanks very much for stopping by.
You.
So the stock now up, what, 18-19%?
Well, in an effort to bring uniformity across the states for seamless interstate movement of goods, the GST Council has decided on the early implementation of the e-way bill for interstate movement of items from Feb 1st and uniform mandatory compliance from June 1st of next year. Mr. Agarwal, the MD of TCI Express, joins in now to discuss exactly this. Mr. Agarwal, hi, thanks very much for taking the time out. So this e-way bill, would it really make it easier for you, or do you think that it's probably going to be a compliance issue for companies such as TCI Express? You're probably going to get more susceptible to unnecessary checks.
So I don't think compliant to this would be a hurdle. But actually, it'll be a good thing for the organized segment, because the unorganized guys, they can't really, I mean, they're used to working without any paperwork or any of that, any compliance issues, right? So in that sense, it makes total sense. It'll be very good for the organized segment, and it'll slowly weed out the unorganized segment, which is a major revenue loss factor for the government.
All right. So how prepared is the industry for this e-way bill? I mean, do you have any concerns at all, or you think you guys are ready to take it on?
So the clarity is still coming as we're speaking. There is there are a lot of like question marks on, like, you know, intra-state also. That has not been announced. It's going to be interstate primarily. So if it's interstate, then even if you're transporting anything like beyond 10 kilometers, you would need an e-way bill. So if I'm taking it from my branch to my sorting center, I would need to prepare an e-way bill. I mean, we don't have a problem with that, but it's just that the compliance part would be much more than earlier, which we are ready for it.
Okay. So in that case, how much of an incremental benefit do you see for the organized space and maybe your own company?
So this is something that has been introduced now. Very hard to really gauge the the impact it will make right away. Perhaps as we go along, maybe in a year or two, we would see the real difference coming in. Now, if the unorganized players can't really keep up with any of these GST changes or the e-way bill, then the customers would get affected, and they would want organized players like us to come in and provide them the services.
Okay, fair enough. Can you break up what exactly a B2B and B2C business is, and what's the revenue contribution and margin contribution of each business as well?
So B2B is about 95% and B2C is about 5%. And in overall, we have EBITDA about 11%. And I think this year we would be closing our PAT levels at about 7%.
Okay. And which is the biggest sectors you cater to, and who might your biggest clients be in that sector as well?
We have automobiles, components, we have pharmaceuticals, we have engineering goods. I mean, we do only the spare parts. We don't do transportation of the actual vehicles. Or just to give you an example, in engineering, we don't transport the generator set. We would actually be moving the parts. The sum of parts that make the generator is something that we are moving. So I think in general, the biggest would be the automobile component segment for us. And this is growing at about 30% every year.
Okay, so just to wrap it up then, can you leave us with some guidance on your revenue and margins front for FY18?
So our revenue growth would be around 18 to 20%, and margin growth would be around close to 40%. Is something that we've come out with for this fiscal year.
All right, Chandra, we'll leave it at that. Thanks very much. So organised players expecting a leg up through the introduction of the e-vape bill. Well, let's shift focus then to another newsmaker. In his first interview after being appointed to the board of Tata Sons, Tata Group veteran Bhaskar Bhatt says that the group's focus will be to increase collaboration between companies and scale-up businesses to leadership positions. Speaking exclusively to CNBC TV18's Priya Shed, Bhaskar Bhatt, who is also the MD at Titan, says that the company aims to hit $5 billion in revenue by 2025.
Chairman Chandra has clearly laid out the way of operating as we go forward, and he was here at Titan, and in his address he talked about being more focused and first establishing an aspiration and then following that up with resourcing and following through on that aspiration, structure and strategizing, and then structure and resourcing. So, and being more agile, but more importantly, I think scaling up businesses to leadership positions.
When you specifically look at the consumer cluster as we speak at the Tata Group, we've seen collaborations happening from Titan. We've seen TCS and Tata Chemicals coming together for Tata Swatch, which was the purifier. I wanted to understand whether such collaborations among the businesses will be the way forward for the Tata Group.
I should imagine it will go up in the coming years. There's been collaboration and cooperation amongst select Tata companies. It has increased in pace in the last few years, but I think the chairman's view is we can do much more, much more, and therefore put in place processes and structures for that to happen.
But speaking specifically about Titan, the company that you've nurtured over the last more than 30 years, of course, at this point in time, it has $2 billion as far as our revenues are concerned at the end of FY17. And when can we expect a $5 billion kind of number as far as revenues are concerned? Is there a roadmap that you've laid out in terms of 2020, 2025 at Titan?
I think our jewelry business scaling up by 2.5 times by 2022 is one path. Watches similarly, more than doubling itself in 5 years is another path. I should imagine that the $5 billion dream can be achieved.
So would 2025 be a reasonable time frame to take?
I think so. If we are not 35,000 crores by 2025,